Coinbase Layer-2 success shows power of marketing over cutting-edge tech. Base's Onchain Summer promotion saw participation of over 2 million unique wallets, resulting in over $5 million in mint revenue to creators, according to a blog post, as well as creating envy among other crypto exchanges. Base appears to outgunning other secondary Ethereum networks. Base's largest DeFi protocol, Aerodrome Finance, shows that almost all of the top markets, especially when excluding stablecoin swaps, are memecoin-linked trading pools. The ease with which users of Coinbase can onboard to Base has also been a winner, done via a smart contract wallet, without the need for seed phrases and the like. Among the rapidly growing ranks of Layer-2 blockchains built atop Ethereum, the US crypto exchange Coinbase's own version, Base, hardly stands out as a technological pioneer. The entire project was built and launched last year using code borrowed from another team, Optimism, with its OpStack framework for easily spinning up new Layer-2 networks. That's partly why it's so remarkable that Base has shot to the number 2 spot on the key industry leaderboard, L2BEAT, with an 18% market share of 74 active Layer-2 networks. Top-ranked Arbitrum's Arbitrum 1 dominates with a 40% share, but Base has shot past older competing projects from teams with hard-fought reputations for cutting-edge development, including Starknet, Polygon, even Optimism itself. These layer networks are designed to execute transactions faster and cheaper than the base Ethereum blockchain. The layer networks use what's known as a sequencer to bundle up transactions and then record or settle them on the main blockchain, not too dissimilar from inking records in a county clerk's office. Sometimes referred to as roll-ups, Layer-2 seconds have become a key element of the broader Ethereum ecosystem's roadmap for scaling toward a world where more, or maybe someday, most, of finance takes place on the digital rails. But it turns out that the race for blockchain supremacy, just as in broader industry, is reliant to a large extent on marketing savvy and an ample war chest to spend on attracting new customers, not just whoever has the best tech. And Coinbase has helped to fuel Base's growth through its own advertising campaigns and promotional events, including the recently concluded Onchain Summer. The question now is whether the activity is sustainable. Are the accounts bona fide users with on-chain needs, or just a flurry of tire-kicking beta testers curious to try out the various protocols built atop Base? Are they opportunistic Deegan crypto traders taking advantage of one-time promotions and quests to collect extra riches, or racking up usage in hopes of eventually collecting tokens? Rewards. The company said Monday in a press release that the 3-month on-chain summer event saw participation of over 2 million unique wallets, compared to about 268,000, resulting in over $5 million in mint revenue to creators. The results really blew us away, a Coinbase spokesperson said in an email. The 2.2 million unique wallets participating was about 8 times what we saw last year and more than double our internal expectations. Base is helmed by Jesse Pollack, who joined Coinbase in 2017 as an engineering manager before moving in 2021 to oversee the company's protocols development. Independent blockchain data confirms the growth at Base. A recent chart from on-chain data provider Token Terminal shows the network accelerating in recent months, while other Layer-2 seconds were experiencing a drop-off. A quick glance at Coinbase's most recent quarterly report filed with the U.S. Securities and Exchange Commission shows that the crypto exchange spent over $165 million on sales and marketing during the 3 months ending June 30th. More than double the amount spent during the same period a year earlier. During the first quarter of 2024, Coinbase reported other transaction revenues of $52.5 million, which includes so-called sequencer fees collected by Base. Meme coin madness. Base has done a good job of competing with the likes of Solana, a Layer 1 blockchain that competes with Ethereum, but is also known for fast and cheap transactions, as well as other Ethereum Layer 2 seconds, particularly when it comes to decentralized finance, DeFi applications, like the swapping of longer tail assets and money markets, according to Rob Haddock, general partner at VC firm Dragonfly. On daily active addresses, DAOs, and daily transactions, Base has overtaken other layer 2 seconds. And for many of the other important DeFi metrics like TVL, sequencer fees, etc., the project has moved into the top 5, Haddock said. What are the specific drivers of traffic, though? A close look at Base's largest DeFi protocol, Aerodrome Finance, shows that almost all of the top markets, especially when excluding stablecoin swaps, are memecoin-linked trading pools. Such activity is notoriously hot and cold, and meme coin traders notoriously fickle with their venues. Looking at Uniswap on Base, the same thing is true, with 2 of the top 5 tokens traded being meme coins, Haddock said via email. Not dissimilar to Solana, they've competed quite well in these long-tail token trading markets, as more young users have moved towards speculating on meme coins. Also driving the success of Base is the ease of moving tokens over from Coinbase, which is done via a smart contract wallet without the need for seed phrases and the complexity of other wallets. The ease of moving through that funnel from Coinbase to Base automatically onboards many of the on-chain curious retail investors who otherwise would need to go through extra steps to participate in DeFi, Haddock said. For Oskari Tempaka, head of growth at Token Terminal, it's down to the foundational strength of the Coinbase Optimism duo, being a US-listed crypto exchange, combined with Optimism scale and expertise in areas like decentralized governance. The pairing positions Base exceptionally well by leveraging Coinbase's brand, distribution, and partnerships, Tempaka said.